loans. But before we do that, just give us a minute here to go live on all the different platforms. We are streaming this live on YouTube, Facebook, and LinkedIn. Takes just a second to get up and running on all the different platforms, and it gives everybody a chance to tune in as well. In the meantime, we put the comments up there, the chat up on the screen. So as you tune in, please drop a comment there. We appreciate it. Everybody that's tuning in nice and early. And we will go ahead and get started here in just a minute. Hope everyone's been having a great week. Happy Friday, everyone. Thank you for the comments already coming in. Jason, appreciate the comment from LinkedIn. Christina, thank you for the comment. We'll get started here in just a moment. But as everybody tunes in, feel free to drop a comment there in the chat. Warren, thank you for the comment. Alex, thank you for the comment. Appreciate that. We'll get started in just a moment. Charles, thank you for the comment. Corey, thank you for the comment. All right, it looks like we are live on all the different platforms, so we can go ahead and get started. As we go, please feel free to keep dropping comments there and drop any questions you have on the deep dive topic that we have today as we go through it. So welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do every morning on this show is go through live rates for some different mortgage programs. And then we do a deep dive into a topic of a type of loan. Today's deep dive is going to be prime jumbo loans. So our sales manager, Jose Gonzalez, with 28 years of experience as a loan officer and a realtor, is going to do a nice deep dive into prime jumbo loans for us today so we can find more out about those. But before we do that, just like we do every morning, we will pull up our pricing tool and go through the rates for some different programs. So Nick, if you're ready, let's pull up the pricing and see what the market is looking like this morning.
Alrighty, let me switch my screen and we will check it out. So this is our pricing tool for our team of mortgage professionals. This will show us the general rates and APR with all the fees. For today, it is September 1st, just after 11 a.m. So all our standard programs have new rates issued. If you'd like a full breakdown of all the fees that go into the APR, a loan estimate, please get with our team members. We have over 300 licensed loan officers in 24 states for primary homes, such as today's topic, prime jumbo. And we can do our business purpose DSCR loans that we love in 44 states. So for today's show, as we do every day, we'll set up a basic scenario and compare that across the different program options. So we'll set a $400,000 loan amount. We'll set the LTV to 80% loan, 20% down payment. Set the desired price to $99. That means we'll ask the computer to find the best rate at one discount point in cost. And we'll compare our options for conforming conventional. Then we'll go into FHA, which is usually the second option for most borrowers. And then we'll check out expanded guidelines, also known as non-QM, where we have over 5,000 additional options. We also offer VA and USDA. Remember, VA is only for eligible service members and vets. If you are eligible, let us know. We can quote it. And USDA is only for eligible properties. If you are shopping for a USDA eligible property, let us know. We can quote that, no problem. So we'll start with conforming conventional. We'll do purchase, 30-year fixed loan, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated FICO of 760 and an estimated debt to income ratio of 40. So with these settings, as we do every morning, let's check out the conventional options. I believe that's a touch cheaper than it was yesterday. 7.125, 0.875 discount points and cost. Final APR 7.287. So again, a little bit lower than it was last week when we had kind of the peak rates in the last 22 years. So everybody is happy with the rates finally going back down a little bit here. So that's good news. If our customer cannot qualify for any of these conventional options, typically the next program we present would be an FHA option. So we'll set up the same scenario. This time we'll select FHA. Everything else will stay exactly the same. That way we can compare the APR across the programs. So let's check out the FHA options this morning. That actually a little touch higher than it was yesterday. It looks like 6.5 rate, 0.625 discount points and costs, puts our final APR at 7.080. So yesterday we were just a touch below 7, right? Today we're just a touch above 7 here for FHA. So FHA does react a little bit differently than conventional. So that's why we love to do the show every morning. Now remember, FHA does allow a little more leniency on credit events as well as a higher debt to income ratio. So for our customers that must use it, it's awesome that it actually has a cheaper cost. And if our customer qualifies for both conforming, conventional, and FHA, you see here the APR is actually a little bit cheaper for FHA in this case, even including the mortgage insurance. So definitely recommend our customers check those out. Now, where we really specialize here at the Mortgage Calculator is if our customer cannot qualify under conforming or FHA guidelines. Many other banks or lenders don't have other options, but we specialize here with over 5,000 additional options here under expanded guidelines, also known as non-QM. So when we select this option, everything else will stay the same, but now we have a new option pop up for income verification. Full doc is what we use for FHA and conventional. That's 2 years of tax returns, what most people are used to. And therefore, we would probably, in this example, not qualify with tax returns. So we would use a non-QM program to use an alternative income method. So we have our asset-related programs, our business bank statement programs. We have investment property programs as well. Personal bank statement, 12-month is the most popular by far for a primary home. So that's what we use for our example. We also have RSU, stated income, BOE, 1099, P&L, and no income CDFI. So for the demo, as we do every morning, we will use the 12-month bank statement program, which is our most popular program for our self-employed borrowers. Many times our self-employed borrowers, when they submit 2 years of tax returns, may not qualify or just may not quite get enough income to qualify for the home they really want. So in this case, we'll solve our borrower's problem by using no tax returns at all. Simply use their last 12 bank statements in this case to determine a debt to income ratio of 40% in this example, using just their cash in the bank, no tax returns involved at all. So most of our self-employed borrowers qualify for double, triple the income using this method and can therefore get the home they really want. So let's check out the non-QM solutions this morning. And non-QM is always a touch higher than conventional. Typically, the last week or so when conventional was crazy, we came in a little bit cheaper, and now it's back kind of to normal here. The best option, 7.5 rate, 1.875 discount points and cost, a little more cost there. Final APR, 7.596. So remember, conventional, 7.2 something. Right now we have a bank statement option for 7.596. So it's a 0.3 cost of conventional. We can use alternative income, which is amazing. Now you see we have dozens, if not hundreds of these programs here. Some of these at a little bit higher rates and costs may allow things like bankruptcies and foreclosures and other credit events that would cause us or our customer to not qualify. So please get with our team. They'll find the best option for you. We love working on these non-QM solutions. Now, Jose's deep dive example is going to be when we put this loan amount way high up over the limit. So we'll let Jose do that. Before we go into Jose's example, we always want to do live rates for investment properties. So with the same exact scenario as we do every morning, we will switch it to investment property, set up the same scenario, 80 LTV, 20% down payment, and we're going to compare our two investment property options. We have conforming conventional options, and then we'll go into our non-QM options. Remember, the government programs like FHA, VA, and USDA do not work for investment properties. So we'll start with conforming conventional. Everything else will stay exactly the same as all our demos. The only thing we've edited here is the occupancy to investment, so we can see the adjustments that the conventional programs have added for investment properties. So best option here at the top, 7.625 rate. Pretty hefty discount points here, 3.375 discount points. Puts our final APR at 7.871 here for conventional. Now, with the rates the way they are recently, most of our investors don't want to pay this high of discount points. Unfortunately, conventional They don't really have higher rates where we can lower the discount points. So definitely recommend our customers check out the non-QM options. Most of our investors would rather spend this $13,500 in this case on another investment rather than buying into a conventional program. So for our final demo, let's check out the non-QM options for investment property. And we'll select non-QM here. First, we need to choose the income option. The most popular income option for investments is going to be our DSCR program because it doesn't actually require any income or employment from our borrower. We simply use the estimated rental income from the property to determine a DSCR number. It stands for debt service coverage ratio. If the estimated rents from the property can cover the mortgage expenses, the PITIA of the mortgage, aka the property cash flows, that's a ratio of 1.00 or higher. We also have options for ratios under 1.00 where the property doesn't quite cash flow on a monthly basis. So tons of options here. We always put 1.5 in the demo. That way we can see all the programs pop up since that's the highest value. And the final thing is a prepayment penalty. 3 years is standard on these programs. That's what we always use. We can select 0. That will not show as many loan programs and cost more. And we can select 5 years. That will, again, not show as many loan programs, but will save us our borrowers some money. So in order to see all the most common loan programs, we always select 3 years on the prepayment penalty. So with these settings, as we do every morning, let's see the DSCR options. Wow, still beating conventional. So we absolutely love our non-QM options. Not often that non-QM beats conventional rates, but today it does, and it has for the last week or so. 7.75 rate, 0.725 discount points and cost puts our DSCR option 7.807, which is just a touch cheaper than conventional. So even if DSCR is more expensive, most investors choose DSCR. But today and for the last week or so, it's an absolute no-brainer for our investors when you compare to conventional, and we can offer a DSCR option cheaper. Definitely recommend our investors take advantage while the DSCR loans are hotter than the conventional loans. Now you'll see we have tons of options here. Some of these at a little bit higher rates and costs may allow things like short-term rental income, very popular request, and same as the other non-QM options may allow things like bankruptcies and foreclosures and other credit events, which would cause our customer to not qualify. So tons of different options here for DSCR. Please get with our team to find the best options for you. Now let me go ahead and switch my screen and get into our topic for today. So for today's topic, we're going to go over prime jumbo loans, which is basically what we would see if we, again, jacked up the loan amount up over the conventional limit, the 726, I believe it is, limit. So anything over that is going to be what we call a jumbo. So there's tons of different options. We don't do that live because it's a very tricky scenario. Once we get into that realm, we need to know exactly which program we're using because they do operate a little bit differently. So prime jumbo are non-QM. Remember, a jumbo loan is non-QM. It's not a conventional loan. It's not an FHA loan. It's not a VA loan. It's not any of those. These are going to be prime jumbo, aka non-QM, but generally follow the conventional guidelines. That's why they're called prime jumbo. So although it sounds like conventional, it's still not quite. That's why we don't do the live pricing on these every day because they are a little bit tricky here. They generally follow conventional, but I'm sure Jose has some tricks up his sleeves as well where we can kind of get around some of that as well. So if you're ready, Jose, let's go ahead and present your options.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Great to be with you this morning. So let me explain a little bit about what a prime jumbo is, because you're probably wondering why they call it prime jumbo. So the reason they call it prime jumbo is because this product is a full doc only product, and it uses automated underwriting, namely DO or DU, to underwrite the product. So it does result in a more streamlined underwriting process. And due to it using automated underwriting, it does result, and being full doc, it does result in slightly better rates than what you're going to find in the regular jumbo or the non-QM world. Because in non-QM, there is no such thing as a jumbo loan. You just have certain loan amounts above which they may reduce the LTV. So you'd have to look at the matrix for the option that you're considering. They'll usually put like a million or 1.5 million, and then they'll have a different plateau after that. And that's how non-QM segregates their loans. But in the agency world, they'll call it a jumbo when the loan amount increases above the conforming loan limits for the area. So that really does depend on the area the property is located. It's, for example, it's totally different in Miami versus Los Angeles. Los Angeles is considered a high cost area, even though I would imagine sometime in the near future, they will probably change that categorization for Miami as well with all the price increases that we've been having. So Prime Jumbo mainly, again, uses automated underwriting. So when you do run it through automated underwriting, you'll have to receive the findings of approve ineligible. So it will approve the underwriting guidelines, so the loan does conform to the underwriting guidelines, but it is ineligible only because of the loan amount. So that is the findings that you should receive, approve ineligible. Now, keep in mind, the beauty of this is that then if you're looking for that 1 year tax return findings and automated underwriting gives you that finding, then you only have to provide 1 year tax returns, right? So that could really help out in a lot of these cases. So I do have purchase options for you as well as refinance options. Now, you will notice how I put there Prime Jumbo Primary 1 unit purchase 10.1% down, because in this program, the maximum LTV is 89.99. So if you're doing your product search and you put 90%, you're not going to get any hits. You'll think, oh, there's nothing available for my borrower, but it could simply be that you have the LTV incorrect. So it would be 89.99, and you will get your options like I did with this one. So our example here, we're looking at a little bit over $1 million purchase price, 1.1 million. We're looking at loan amount of 989,890, right? That's our 10.1%. So again, very good options here. This is a full doc only product. And again, one thing I wanted to note, mortgage insurance is already built into the rate. So there is not an additional mortgage insurance charge. So you're looking at 8.75 with a little bit of a lender credit, and then you can buy it down all the way to 7.75% for this 1 unit purchase. So now we have our 2 to 4 unit purchase. Now there is a bit of a loan level price adjustment besides there being a 5% LTV reduction. There is a bit of a loan level price adjustment when you're using a 2 to 4 unit property, which is a reason why you see the rate does increase a little bit there. You're looking at 10.75% as your lowest cost option and 9.25 being your lowest rate option. So if you are looking at a 2 to 4 unit, you would probably want to compare this to possibly some other non-QM options for full doc, which you may find a little bit lower rate on a 2 to 4 unit than 10.75%. So now on our investment property, our lowest LTV is, lowest down payment is 20%, highest LTV 80%, but we do have very good rates. Now these rates would definitely be better than a non-QM rate for a similar product, full doc. You're looking at 8.5% being your lowest cost option and 7.5% being your lowest rate option, which is an amazing rate considering this is a jumbo loan of an investment property. Investment is the key there. So now our 2 to 4 unit at an 80%, now the rate does improve substantially because you don't have such a large loan level price adjustment because we have more options available at an 80%. At 85, it's a little bit tighter. So you're looking at 9.125 being your lowest cost option, and you can buy that down to 8.125% for your 2 to 4 unit prime jumbo purchase, 80% LTV. Now some cash out refis, we are looking at 80% as the maximum LTV for a cash out refi. Doesn't matter if it's investment or primary. In this case, this one is primary, 1 unit, and you're looking at 8.5 with a little bit of a lender credit. And you can buy that down to 7.375. And our prime jumbo investment cash out, again, 80%, similar good rates. The LTV does not drop when it's a 1 unit property on the cash out. So 8.5, your lowest cost option, and you can buy that down to 7.75%. And now our last two options are for 2 to 4 unit. In this case, it's a primary 2 to 4 unit cash out refi, and we can take this one to 80% again. Very good rates there, 8.5% with a little bit of a lender credit, and you can buy this one down all the way to 7.375%. And our last example here is our prime jumbo investment 2 to 4 unit cash out, and 75% is the maximum LTV here, and you're looking at still very good rates. 8.5% is your lowest cost option, and 7.75% is your lowest rate option. So as you can see, very good options for 1 to 4 unit properties, for primary, for investment. I didn't give any second home options, but we do have second home options as well for this product. Keep in mind, the only catch here is this is an automated underwriting required product, so you do need to obtain and approve ineligible findings in order to be able to submit to one of these products options.
All right, great. I don't see any other questions, but that is some great info, especially guys. Keep in mind 89.99, right? That's something that trips people up. And then make sure to get approved ineligible. If you get approved ineligible, that's good, right? You don't need the eligible. It's not going to be eligible because of the loan amount, right? So a couple tips to just keep in mind there. But with that being said, I think we can go ahead and wrap it up. Visit us at themortgagecalculator.com if you have any questions or need to connect with the loan officer to be walked through these products. Remember, we do this show 11 a.m. Eastern every weekday with, the live rates and then to deep dive into a different topic. Now, we won't be doing it on Monday since it is the holiday. So the next time we will see everybody is Tuesday at 11 a.m. Eastern with a new topic. So we appreciate everybody tuning in. Thank you, Nick. Thank you, Jose. And we'll see you all Tuesday, 11 a.m. Eastern for the next episode of Daily Rates Live with the Mortgage Calculator. Everyone have a great day.
Thanks, everybody.
Thank you, everybody. Have a great day.